Welcome back. It's been a little while since we've done a news segment, but the topics of conversation we have got on the table today are Rightmove is considering becoming a mortgage lender. We're going to go through the autumn statement and we're going to have a look at the mortgages and what's happening in the market right now. So let's get straight into it. Rightmove are considering becoming an official mortgage lender. How can they do that? Rightmove have actually partnered with Nationwide for over a year now. If you haven't noticed, when you scroll through Rightmove, if you want to use a calculator to see if you can afford to buy that property, Nationwide are behind that calculator. So Rightmove today, they are going to their investor meeting at the London Stock Exchange, and they are going to be speaking with their investors and running past them the idea of becoming an actual mortgage lender so that they can provide more services to anybody that uses Rightmove. And as we all know, Rightmove has the majority share in the advertising market of where you would go to advertise a property that is for sale. Now, how it would actually work is, I don't know if you've heard of a lender called Coventry Building Society and a mortgage lender called Godiva Mortgages, but Coventry Building Society actually own Godiva Mortgages. So I think what would happen if Rightmove did decide to enter the mortgage market, Nationwide would own Rightmove Mortgages, and Rightmove Mortgages would essentially be a subsidiary of Nationwide. Nationwide as a building society would still provide their own mortgages, much like Coventry Building Society does, and then Rightmove would have a different set of criteria and a different set of lending. I actually think it's a really, really good idea. They have a massive market share. It would be very easy for them to step into the mortgage market. I think they've got a lot of trust as a brand, because pretty much everyone you know will say, oh, looking to buy a house, have a look at Rightmove. Some of the challenges they might have is setting up as a mortgage lender. There's a lot of intricacies. There's a lot of work with the FCA as they regulate the mortgage industry. So there might be a time delay. If they decided today to set up their mortgage company, I think it would take them probably a year to actually roll this out. Let's backtrack from today's news and have a look at the autumn statement. But let's not forget that this whole autumn statement is pre-election. Everybody puts out policy that is a "can I have your vote, please?" And some of these policies may not go through post-election, so let's take everything with a pinch of salt. Michael Gove has spoke a lot about expanding the investment zones that are out there. Now, these investment zones are places like Greater Manchester, West Midlands, East Midlands, Liverpool, South Yorkshire, Tees Valley. I wouldn't personally, as an investor, go and chase those investment zones. So I wouldn't look at this policy and think, I'm going to invest in Greater Manchester because the government have said they're going to put millions or billions of pounds into that area. However, if you already live in that area, I would be looking at your town plan and seeing where this investment money is going to be put. So what streets are they looking at regentrifying? That's what I'd be looking at in the town plan. Now, I have seen this personally work really, really well in Wales. So in Wales, you can gain a lot of grants for residential that's above shops and bringing them back to life, bringing them back to standard. The Welsh Government will also give you money to do up the shop below and then, you know, bring upstairs into use, turn it into a couple of flats, whatever that floor space allows you to do. And I've seen an investor do this really, really well. They've not had to put any of their own money into the refurbs. They've just used the grants that are available. Now, if a similar thing that's happened in Wales happens in England, then I would definitely be looking for semi-commercial buildings, because all you'll need to do is either use your funds or raise funds from private investors to buy the building, and then you can get a grant to do it at, which I think is great, basically free money. The other part that I'd be looking at with these areas that have got massive investment being put into them is the jobs that are going to be created and where are these people going to live. Any construction work that's happening, are these people likely to be living in serviced accommodation? So if you do live in these investment growth areas, go out and make some HMOs and market to contractors in the area. Go out and get some serviced accommodations up and running. I think this is a great place to start. Even if you're starting out in rent to rent, this is where I would be looking at building my portfolio because I know there's going to be an extra 30,000 jobs created, which means there's going to be an extra 30,000 people per area. So that's my thoughts on the investment opportunities in those high growth areas. The next topic is inflation, and I'm going to directly quote from his speech.
Freezing the local housing allowance was an urgent priority.
No shit.
I will therefore increase the local housing allowance rate to the 30th percentile of local market rents. This will give 1.6 million households an average of £800 of support next year.
Yeah. Now, if we break that £800 down, we're looking at £66.67 per month for each person. Now, in reality, that's not a massive amount of money, but the other problem is the landlords have, as we know, had a lot of increases with their mortgages with the interest rates going up. So anybody that's been on a tracker rate that tracks the Bank of England base rate, their mortgage payment has gone up drastically over the last year and a half. Anybody that's on a fixed rate, as soon as that fixed come to an end, their mortgage payment is pretty much doubled. So £66.67 going to the individual is actually immediately going to go to the landlord because the landlord's been desperate to put up the rent. So it's not going to help the individual. And because the landlord's mortgage has doubled in those areas, it's also not going to go very far in keeping the landlords investing in that area either. So swiftly moving on, let's see what else came up in the autumn statement. So what we've been referencing so far has come from the speech, and the section on housing supply was only referenced during the speech, and we went and had a look at the statement to see what was actually said. The government is investing an additional 32 million across housing and planning to unlock thousands of homes across the country. This includes additional funding to tackle planning backlogs in local planning authorities. Now, we know that just means that they are looking for votes, because although planning could be a lot quicker process, we always have known that councils have been understaffed. They don't have enough staff to get the planning applications through in a timely manner. And they have spoke about if they don't answer in time, then your planning application becomes free, which then just turns into the local authorities having less money and still not getting the applications through in a timely manner. The other problem that we've got is if we can get planning through quicker, say it does work and the planning applications all happen within the timeframes that they're supposed to, the developers have had a lot of issues with cash flow and with their overheads going up. So developers are developing less properties and they're not developing so quickly. And unless we solve that problem, yes, we might get planning through really quickly. However, the developers can't develop any quicker. So instead of just helping planning to go through quicker, which I don't believe will happen, the government could have a look at the fact 675,000 homes are empty in England, and 250 of those have become unused in the last 6 months. The government put into their policy that they would like 300,000 homes built year on year, and actually we never meet that target, and the amount that we are working towards that target declines each year at the moment. Now, the 675,000 homes, if we brought 300,000 of those back to life this year and next year, that would be the whole quota. So there you go, government. Free advice from Progressive. Let's go and convert all of the empty, unused homes back into properties that people can live in, and we have solved the next 2 years' housing quota without developing any more land. Now, on to the part of the autumn statement that everybody seems to be talking about. And everybody seems to be talking about this part of the statement as if it's already happened. So let's not forget that actually the consultation of having permitted development rights to being able to change one house into 2 flats has not been passed yet. My first thought as an investor is, if you're in a higher value area, taking one house and turning it into 2 flats can quite often add value to your property. If you can take one 300 grand house and turn it into 2 £200,000 flats, then we've got an asset that's now worth 400k that used to be worth 300k. Let's not forget how much this might cost us to convert those. We need to add that into our figures. Now, my other thought is, if you go to a lower value area, you might take 150 grand house and turn it into 2 flats that are worth £40,000 each. So now you've taken an asset worth 150k, you've spent money on conversion, and you've got 2 flats that added together are worth 80k. So as an investor, you need to consider, does this work in your area in terms of are you adding value, or does this not work in your area because you're devaluing that property? Now, the other thought is not just the value of the properties. Having 2 lots of rent comes in will increase the rent, but it also de-risks that property for you. Because if you've got 2 rents coming in and 1 tenant stops paying, that other tenant is still paying you, so your mortgage can be paid. Whereas if you've got 1 house and that 1 tenant stops paying, then you're paying that mortgage, which is why at Progressive, all of the trainers always say safety in numbers with properties. You want to get from 0 to 5 properties as quickly as you can, and then from 5 to 10. And once you've got to 10 properties or 10 rents coming in, whether that be through changing houses into flats, if this gets passed, or through HMOs, then you've de-risked your portfolio. So if you're interested in growing and optimizing your portfolio, there's a link below in the comments, 42 top tips. Click that link because we want you to read that document and succeed in property. But before you go and click the link, let's get back to the statement. So my overall thoughts and views on this policy is it's all a big carrot on the end of a stick. Until the policies actually get passed, they may or may not happen. And as we've seen with the HS2 policy that was being built and then it wasn't being built and then it was being built and now half of it's not being built, things change quickly in the government. And as investors, we're not going to go and invest in those investment areas that the government have spoke about. If that's your area, great, keep an eye on the policy. And if it comes in, utilise it. If that's not your area, then stick with your area because this may or may not be passed. The local housing allowance increase is so small that that's not really going to help the tenant and it's not really going to help the landlord either. And the changes in planning in terms of are they going to speed up the process? Who knows? Have they got the manpower to speed up the process? Probably not. And is this 1 house into 2 flat permitted development right going to happen? Again, who knows? Let's keep an eye out and see if these policies actually get passed once the election next year has happened. Anyway, let's move on. I promised I'd give you a mortgage update, so let's go into that now and see what's happening out there in the mortgage market. Now, as you will have seen, rates have increased a lot over the last couple of months, and they've actually plateaued, so they've not gone down too much. We've seen a few decreases in some of the mortgages out there, but the Bank of England base rate has stabilised. The Monetary Committee Policy's next meeting is on the 14th of December, and they will decide, is that Bank of England base rate going to stick? Is it going to go up? Or is it going to come down? Now, I think we can rule out it coming down. So I would be looking at, do I think it's going to stick or do I think it's going to go up? Personally, I believe we're going to stay at 5.25%. I believe that by the end of next year, that interest rate will have come down somewhat, as long as any of the wars that are happening out there at the moment don't suddenly worsen overnight, because that normally forces interest rates to spike quite quickly. Now, the other rate that I always tell you as the educated investor to keep an eye on is the swap rates. The swap rates have actually been coming down quite nicely over the last couple of months, and we are very close to 4%, and we were quite close to getting below 4%, which would have been the first time that has happened in around a year. And remember, the swap rate is the rate that the lenders swap money with each other. That affects our fixed rate mortgages. So as long as those swap rates keep coming down, our fixed rate mortgages will come down. I think the Bank of England will stick on 5.25 in December, and hopefully by the end of next year we will see that decreasing quite nicely. So the mortgage market, the lenders have actually done a really nice job in trying to keep the rates low. The problem is a lot of people are saying that the arrangement fees are quite high, and the arrangement fees have been quite high, 5.5% with a 5% arrangement fee. When you average that out, you end up with your rates being 7%. 8%. And I see a lot of investors saying this is awful, these arrangement fees are really high, we're adding all of this money to the loan. However, the reason the lenders have done this is because what they're recognising is some landlords are becoming mortgage prisoners because their rent isn't matching the mortgage. So what they're doing is bringing the rates down, but to still be able to make their margin, they've made the arrangement fees high. So the rates then allow the landlord to stress the property against the rent. They can then take out that mortgage and the arrangement fee is high. So it's not nice, but it is the lenders trying to help the market stay liquid. There we have it. Today we've been through the autumn statement. We've had the breaking news on whether Rightmove is going to enter the mortgage market, and we've had a mortgage update. If you're interested in hearing more, then a video is going to be popping up any minute. Great to see you again today. I've been Emerald Fisk. You've been fabulous. See you on the next video.